Okay, good morning, good afternoon, everybody. My name is Nathan Dean. Welcome again to the Washington Policy Pulse. Happy St. Patrick's Day to you. We've got a lot of stuff happening here in Washington. A lot of it, subsequently a little bit less of news cycle worthiness stuff happening, at least for those of us in the markets, compared to last week with the government shutdown. But that's really where I want to start this week is the fallout of the U.S. government shutdown debate. So on Friday, we saw the Senate pass the House continuing resolution. This kicks the can on funding until September 30th. Obviously, there was a lot of debate on whether or not the government was going to shut down or not. But ultimately, we saw Senate Minority Leader Chuck Schumer vote for the deal and vote to keep the government open. And obviously, I think for many of you who follow the news cycle, you know that Senator Schumer may be paying a little bit of a political price now in terms of what is the future of the Democratic Party. There was a poll from CNN over the weekend that said Democrats have a popularity of around 27%, which is one of the lowest. Look, it's the lowest I've ever recalled in my time covering politics. So, but the Democrats right now have to essentially come together and try and figure out what their strategy is going forward. Now, I'll leave a lot of that to my colleagues over at Bloomberg News, but we put out a note on the article or on the terminal just after the government shutdown was averted that essentially said, look, there is going to be some anger amongst the Democratic Party here, and there is going to be some anger of wanting to be seen fighting the president the next time this next major congressional catalyst comes up. And for us, that is the debt ceiling. Now, just over the weekend, Treasury Secretary Scott Bessent put out a letter saying that they don't think they're going to reach that X date, if you will. This is the date where Treasury can no longer use its extraordinary measures. They won't reach the X date until after June 27th. And that's in line with what our chief rate strategist, Ira Jersey, is thinking at the moment. The X date will get better clarity of when that date is after April 15th. Once tax day comes and goes, we'll get a better idea of when that X date is. But we still maintain a high probability that the debt ceiling is not breached because, like we see with the government shutdown, I don't think either party wanted a government shutdown, and I don't think either party wants a debt ceiling breach. The market reaction. And look, many of you on the call, better than I would about what the market reaction would be, but it's not going to be positive. And so we do think that the debt ceiling is going to have to be a bipartisan affair. We don't think it's going to go through the reconciliation process. We do think it's going to have to require 7 Democratic votes in the Senate to get a deal done. But ultimately, like without knowing the specifics of what the Democrats want to use as a leverage point or trying to score, political policy goals and so forth like that, without knowing the specifics of what the Democrats want to do, we don't think a debt ceiling breach is going to happen. But obviously, there's going to be a lot of headlines and a lot of hiccups and a lot of political rhetoric reading into that. But we have a couple of months, so stay tuned on that. Next thing on tariffs, obviously, just want to call out that just a few moments ago, Bloomberg News is reporting that April 7th, there are going to be reciprocal tariffs and there is also going to be sector tariffs. Now, the question is, I have 2 questions. And again, you can find all of our tariff research at BI Tariff Go on the terminal. But the 2 questions that we're looking out for at the moment is this. One is, are these April 2nd tariffs, actually, I'll say 3 questions. The first question is, will these April 2nd tariffs be scaled back? And this fits a pattern. President Trump comes out there with a statement, there's a negotiation, and then these tariffs are either walked back or, subsequently incrementally put on. But what are the negotiations that we're seeing leading up to this April 2nd? The second question is, what is the time frame? Because there is a general thought here in Washington that on April 2nd, President Trump makes his statement and says, here is the tariff, but maybe they're not implemented for another 30 days, like we saw with Canada and Mexico first time these came out. So keep that in mind. The time frame of these tariffs may be different. And the third tariff is mostly if for those of you who have exposure to the European Union, is what is this idea of the non-tariff relationship? So our friends over at Bloomberg Economics, they did a great analysis back in February. I can send this to you if you'd like, if you have a terminal. This is on the terminal, where they looked at tariff versus tariff. And the countries that were impacted the most were India, Argentina, and to a lesser extent, Brazil and Southeast Asia like Vietnam and Thailand. However, that's tariff versus tariff. The other question, though, the third question is, what are the non-tariff measures? Quotas, inspections. And for those of you that have exposure to the European Union, VAT, value-added taxes. Now, we really don't have an idea of how the White House is taking into account VAT. Our tax analyst, Andrew Silverman, has a couple of thoughts, but that is one of the biggest questions for us is how is the VAT going to be incorporated into this April 2nd reciprocal tariff? And that's something that we're going to be trying to figure out over the next week or so. So keep in mind on that. So over the weekend, we also saw a report from the New York Times that President Trump is thinking about putting in another travel ban. If you remember in his first administration, he put in a travel ban. The New York Times report essentially says there are 43 countries over three tiers, if you will. One tier, automatic no inclusion. Second tier, you have to actually sit down for a face-to-face meeting before you travel to the United States. Third tier is you're on heightened awareness. Our Asia analyst out for U.S. For Defense and Airlines, this is George Ferguson's team. If you ever met George, he leads our defense and airlines coverage. They put out a note react over the weekend and essentially said, look, if the travel ban, according to those 43 countries, were to go forward, Turkish Airlines, Qatar Airlines, and Emirates would be the most impacted. But if you actually look at the travel countries that are on that list, it represents 1%, less than 1% worth of sales. So essentially, there's really not going to be much of an impact for the airline industry in terms of those travel bans. Now, I haven't heard any idea when this travel ban would come out. We're still waiting for executive orders on critical minerals and so forth like that. So take it with you, will. It could be a couple of weeks. It could be next week. Just really hard to say. Just a couple of things in the financial regulatory space. First off, Bloomberg News and a bunch of other news reporting agencies are talking that Michelle Bowman, the Federal Reserve Governor Michelle Bowman, is going to be named by President Trump as the next Fed Vice Chair for Supervision. Now, this is essentially one of the most critical rules for financial regulation. So if you have exposure to banks, this is certainly something you want to pay attention to. Now, what can the Fed Vice Chair for Supervision do? Well, over at the Federal Reserve, they have 7 governors, and the Vice Chair for Supervision is the one that essentially leads the examination, the regulation, and the supervisory provisions of the Federal Reserve. Now, this individual, it was Michael Barr up until February 28th. This individual also is the one that has the most direct influence on rules and proposals and regulation and deregulation. Now, the one thing that the Fed Vice Chair cannot do, however, is that the Fed Vice Chair cannot bring a proposal or a vote to the governors and have the governors vote on it over the objections of Federal Reserve Chairman Jerome Powell. So Powell is the one that sets the agenda. Powell is the one that sets the votes. Obviously, he's not going to bring something that he's going to vote against. So just keep that in mind if you're trying to think out how this is going to work. And I would also remind folks that because all 7 seats are still there are 4 Democrats, 4 appointed by Democratic presidents, 3 appointed by Republican presidents, and Jerome Powell is one of those 3. So I would just say that anything they hear over at the Federal Reserve is going to have to be bipartisan in nature or incrementally different, not think scalpel, not axe in terms of financial regulation. So we also put a couple of notes out on the terminal, just essentially saying like when it comes to the Basel III Endgame, think capital neutral. For the ESLR, look, there's lots of talk about the ESLR going at the moment. This is the supplementary leverage ratio. There's a lot of different ideas in terms of the ESLR, so we're going to try and pick one. Right now, we're just floating around different ideas. Look for that later this week on the terminal. But then also things like stress test changes. Michelle Bowman is a community banker by heart. She was the Kansas State banking community regulator for community banks in the state of Kansas. So I wouldn't be surprised if you were to see a 6-month pause, if you will, and a overall holistic review on capital, and then potentially changes coming out. And I do think something like an SLR change or stress testing change could probably get the votes over at the Fed because I don't think Jerome Powell is really much in the eyes of trying to block some of this. Just last week, the Federal Reserve General Counsel Mark Vandeveld gave a speech where he essentially said, look, the writing's on the wall, and I'm paraphrasing here, the writing's on the wall, we're going to do incremental changes. So keep that in mind. And then also in the financial regulatory space, or more so the fintech crypto space, last week the Senate Banking Committee passed the Genius Act 18-6. This is the bill that is a stablecoin bill. This requires stablecoins to be backed by 100% of high-quality liquid assets. There has to be federal regulators or state regulators, depending on the size of the threshold. And because the vote was 18-6, I think that bill now has enough votes to get past any Senator Elizabeth Warren filibuster if it comes up for a full Senate vote. And as a result, I think a stablecoin bill, we were at a 70% chance of odds of it succeeding. I'm going to go to 80% when I see that they want to actually move forward with this bill in the Senate, in the full Senate. but I think this bill can get across the line. And I'm thinking probably May at the earliest, probably more likely June and July. So the stablecoin bill, I think, is going to have decent chances of success. There's two things though that can hold it back. One is that it just gets roped up into these broader market political realities of, things like trying to pass other bills or anything like that. And secondly, if it is held back for the idea that we're going to do a crypto market structure bill, that's something that, could potentially hold back the stablecoin bill as well. And this is where, if you've been in the marijuana space, for example, the Safer Banking Act, every single time the Safer Banking Act had momentum, the Democrats at the time would say, no, let's pursue a broader marijuana agenda, and the Safer Banking Act never went anywhere. That potentially could happen here, but I still don't. I still think that they're just going to pass this over the line and get it over, get it. So think of that May to July timeframe. Um, Last thing I want to leave you with, it's March Madness. If you have a terminal, you can beat me at BRKT Go, bracket Go. I'm horrible at it, but I just wanted to call out two picks. I have McNeese over Clemson, High Point over Purdue, which pains me because I'm a Purdue grad. And then in the women's tourney, George Mason over Florida State and Montana State over Ohio State. So thank you very much for attending. Really appreciate it. Feel free to reach out with any questions, and have a great week, and we'll talk soon. Thank you.